This is All India Radio. In the program Spotlight, we now bring you a discussion on investment opportunities in India. The participants are Shubhamoy Bhattacharjee, economic analyst, and Shishir Sinha, journalist.
Prime Minister Narendra Modi addressed a virtual global investor roundtable and he talked to 20 top fund managers from across globe. And these fund managers are managing almost $6 trillion worth of assets, which is almost double the size of Indian economy. Shubha, how do you see the timing of this roundtable?
These roundtables don't happen suddenly. There is a reason why governments, especially countries like India, decide to hold such roundtables. There's a periodicity, the government which sort of thinks it through over time and then decides to approach investment managers to hold such meetings at one go. So what happens is that over time, companies, fund managers and others, they approach the governments with certain queries. They have certain issues. They have certain expectations. And the government often tries to bring in the key, creates one particular forum where the head of the state addresses the fund managers to take on board all their concerns, questions, expectations, and also lay out a plan of action which gives them adequate room to mull over, to chew over synergies, to create ability for further investments. So that is the context of this roundtable. And that is why this roundtable, so it's not sort of a one-off suddenly that has come up, but it has been considered, thought through, what I might call action by the government of India.
During the month of November, December, and also in the month of January, mostly fund managers decide about the allocation, and that could be one of the reasons to holding at a time when they are going to make a decision in this regard?
Absolutely, because as the year comes to an end, and for most fund managers abroad, the year is basically January to December. So what happens is that by November, they sort of have already finished their yearly allocation for each country, for each portfolio, and then before they go for their Christmas break or generally settle up their accounts, they try to get an idea or a sense of where to go and invest in the next new year. So what happens is countries take this October to November period very critically. Actually reach out to these people to be the first one. It's almost like one of the comparisons that is often used is something like university placement. In the top universities, the companies like to come on the day zero to be able to catch the best of the lot. So similarly, countries with very strongs to sell try to approach their fund managers early on in the November month especially. Because by December, the fund house is basically closed and nobody there really to do the talking to. Early November is a very good time to hold such thorough discussion.
Shubha, let me discuss some of the points which Prime Minister used in his address to the fund manager. And I'm just going to use his comment. The quote starts, India's quest to become Atmanirbhar is not just a vision but a well-planned economic strategy. A strategy that aims to use the capabilities of our businesses and the skills of our workers to make India into a global manufacturing powerhouse. A strategy that aims to use our strength in technology to become the global center for innovations. A strategy that aims to contribute to global development using our immense human resources and their talents. End of the quote. Shubha, how do you read this statement?
There are two parts to this quote. One is, of course, the content which you read out. The second part is, it is coming from, as I said, the top person of the country. An important part here that it is not just the finance minister, but the Prime Minister himself who is taking on the leadership role of saying that I am putting at stake my reputation. Tell the investors that this is a good place to invest. So the words that he chose, this is that India is a place, if you want demand with democracy, if you want sustainability with investment, these are carefully chosen words. And they are not being parroted by somebody else. They are being said by the person who himself is basically leading or sort of riding the message. So to that extent, it is important. So basically both who's saying it and the choice of those words an important and a significant combination.
You also tried to explain the concept of Atmanirbhar or self-reliant because there are so many theories going behind that. Some people say that it is just producing in our own country. Some people say that we also need to import something. So he tried to give a clear definition of what he explained in the month of May to the Indian audience, and now to the global audience. He's trying to address that. Another important line which he used and which you mentioned in your comment also, he talked about 4D. One is the democracy, then the second one is the demography, the third one is the demand, and the fourth one is the diversity. I think the first three are very commonly used, but the fourth one is also very, very important. So what is the importance of diversified market for a global investor?
In fact, that is what an investor would want to hear about. Because no investor wants to, today at least, given the pandemic, would want to think of a market as a unidimensional market. Gone are the days when one invested in an oil-rich economy, where the country had nothing else to offer but had plenty of reserves of oil and said, well, fine, come along and make millions out here. Today, the best countries, best stories are coming from those countries which are offering a smorgasbord of opportunities. And to that, the word then therefore becomes, keyword therefore becomes diversity. That how well does the country harness its variations, its diversity, its ability to have several different strands, all contributing to a good market. As you rightly point out, Atmanirbhar is important. But there are investors here. They are not whether people who will be put off by the concept that India is doing its own investment and all that. These investors are not particularly concerned on those. Point is that whether whatever you're doing, is that going to lead to a good rate of return on the investment that you're doing. So whether you do it within India or whether you're doing it export, that's fine with them. But do you have a clear game plan of including all the facets of the economy? Be able to create what you want to do. So therefore, I would think the choice of words like, as you say, diversity is very significant. That is what investors would also want to do. Remember also that shareholders today and are not just concerned only about returns, they are also concerned about face of the corporate. That whether the corporate takes steps which are in consonance with environment, in consonance with gender issues, in consonance with what is called ESG, the environment, social and governance issues. Their diversity issues, democracy issues become very important for these companies.
Let me just explain the word diversity from what Prime Minister said. He said, and I quote, "Such is the diversity that you get multiple markets within one market. These come with multiple pocket size and multiple preferences. Though these come with multiple weathers and multiple level of development. This diversity also comes with open minds and open markets in a democratic, inclusive and law-abiding system." Shubham, how investors can calculate or how an investor can estimate his return on investment where he is going to put money?
The short answer to that is, it is difficult to know today. Returns today are much more subject to uncertainty. Earlier, there were known risks about, for instance, if you go to a country with, say, not much of democracy, but you knew that there was a natural resource that you could exploit. So that was a risk, but it was an estimated risk. Similarly, if one went to a country where there was a lot of availability in terms of the country's markets, but the country had a particular governance which doesn't allow for room for debate. So there is a clear risk, but those were known risks. Today, those known risks have been replaced by unknown risks and uncertainty. And in that uncertain market, obviously investors say that they are willing to accept that there will be situations of saying we don't know. But when it's not known, they would want the country not to raise the risk by being what I might call unidimensional. And therefore, the Prime Minister's emphasis on the variations within the country in terms of, the different multifaceted markets, the different pockets, which means the different income groups, the ability to understand and to play along with the different demands of the society. These are recognition of that fact that uncertainty is something that is going to be definitely there, just as this decade, third decade of the 21st century, is also a decade of tremendous opportunity, and a country which is at the top itself, that there is these challenges, gives investors just that extra bit of confidence that it is worth putting your bet in this economy. I think, therefore, India is saying is that in this current circumstances, we are better ones because we know how to handle various uncertainties. And yet the current recovery from the lockdown shows that yet we are able to sustain it, we are able to overcome the challenges, and we are able to produce good results.
And will it be safe to say that diversified market gives you opportunity to diversify your risk rather, or if I can use the word, distribute the risk, and at the end it lowers the risk?
Definitely. One of the things about emerging markets is that emerging markets, unlike the developed markets, do not have the advantage of a hard currency. They do not offer a clear line between the investment and the returns in very well laid down parameters. For instance, there's an exchange risk that every emerging country has. They have the risk of fluctuating exports. They do not have the advantage of, as I say, one strong natural resource just to bank on, which can override other difficulties. What they do offer and what the new emerging economies are doing is that they are offering growth where a lot of the world is now realizing that this growth is something which is interesting because it tends to accept the uncertainties. It's not surprising that there's been so much of flow in a year like this when we had expected the worst. Both FII flow and FDI flow into India has shot up in this year is a reflection of the fact that people are able to, or rather the fund managers are able to acknowledge that India is able to manage its uncertainties. As an emerging economy, that is a very major tribute. It was in an earlier period of risks when we have had, and we have had so many earlier period of risks, like in 2013 when there was a taper tantrum, even in 2017 when there was a slight amount of fluctuation. But going back even earlier during the oil shocks or during the global financial meltdown, India was one of the first countries, naturally, which suffered the brunt of those meltdowns and foreign money turned scarce. The fact that in this pandemic, foreign money is rather swelled. RBI today has a surfeit of riches. Its foreign exchange reserves is coming close to $600 billion. These are indicators of an economy which has come to be seen as a very steady boat in a sea of uncertainty. And that, I think, is the message which the fund managers wanted to become reiterated again from the top man, and which was exactly the point of the meeting yesterday. There would be issues like allocational principles, whether government bond market would be more relaxed, whether there would be more avenues coming in for corporate debt, how stable would be the taxation regime. Those things are, I suppose, certainly be there. But all of those basically underscore the fact that people are willing to do much more business.
So we have discussed about investors' expectation, their return and everything. Now the issue is that what people in India will get. I mean, there are two areas which the Prime Minister discussed in his speech also. One is the investment in infrastructure, and the second one is that invest not just in big cities but also in smaller cities and towns. How do you read these two messages?
What we do know, and one of the major challenges that India faces today, is that our banking system coming out of this pandemic is not in the best of health. While it has been expanding credit, in September the credit numbers have been much more impressive than quite some time. But yet, there's no getting away from the fact that the Indian banking system, through decades of mismanagement, has come into a fairly bad shape. Now, for that banking system to be able to finance the needs of the economy is frankly suspect. The insurance sector and the pension markets are of course coming in, and they are coming up very strongly now. The numbers are becoming very impressive, but still they have some distance to go. So in that sort of a market, then where does the money come from? The major money that comes is, and which is what we would be looking at, is this FDI and FII flow. What is very necessary? Because companies then can see that if they have to raise money, they don't just have to depend only on banks. Remember, for the big companies, this is never a challenge. For smaller companies, for startups, and you're talking about the smaller, that for Indians, generally, like what does it aim for them? There are so many of these companies which are now lighting up the tier 2 and tier 3 cities, providing employment, the e-commerce companies. There are so many other startups in different sectors which are coming up. But for all of them, the challenge is where does the money come from to finance their activity? The government is able to create a situation where money from abroad comes in easily. And by easily, I mean at a lower rate of interest. Obviously, that is something which is a very major advantage.
Thank you, Shubhmoy.
Thank you.
You were listening to a discussion on investment opportunities in India. The participants were Shubhamoy Bhattacharjee, economic analyst, and Shishir Sinha, journalist. This program was produced and presented by the News Services Division of All India Radio. You can listen to it on our mobile app, News on AIR. This program is also available on our website, newsonair.com. You may email your opinion about this program at airnsdtalks@gmail.com.